Well, good day, all. Ira Epstein of Linn and Associates with your metals market update, and this is your wrap-up for Wednesday, July 10th, 2019. We're just after 4:30 p.m. Central Daylight Time. So the testimony today from Fed Chair Powell moved me even to the camp where I now think, and I wasn't there, where I think the Fed's going to make their move at the end of July to make an interest rate cut. The market had priced out a 50 basis point cut, so suddenly it's putting one back in. Not high percentage, but it's there. And that's interesting. If you saw his testimony, at least my appearance of what I saw, was the Fed's ready to err on the side of getting the economy and keeping it from losing the steam it has or cushioning the blow. They don't want to see what happened in Japan. They don't want to see what's going on in Europe. And that's part of what you saw. The most interesting thing to me, and that's all I can tell you, is the strong jobs growth. Fed Chair Powell said it shouldn't change the Fed's opinion. When he said that, the market reacted to it because it was such a strong number. So will he do it? Nobody knows. But what I can tell you is the Fed is bent on creating inflation. All you have to do is listen to his conversation. They want to get to that 2% target. They don't want to lose that momentum in the market. They can't explain the Phillips curve. I'm just giving you a summary because I listened to every word basically as to what was going on. It was 3 hours long, by the way. And you keep listening as there's something new. After a while, you tune yourself out because there isn't. But good questions today, and I was pretty impressed with how the Fed handled everything. Of course, they asked him if he was going to finish his job, and as he said, under the law, he has 4 years. But metal markets moved out to the upside. Dr. Copper, as I call it, really jumped on that news. The Fed also said that they're very concerned about trade, and it would help the market and the Fed, especially if some of these trade issues got resolved. When we take a look at gold on a weekly basis, I mean, you can't argue with what you've got. You closed at $14,1250. The highest close so far recently has been $14,1370. So we're up near that area. When you look at how the market is trading, it's in a congestion area. You can't just say the market suddenly is taking off. That's not true because you've been up on the daily bars to higher prices. When you come now to the swing lines, you've got a lower low and a higher high. So you've stepped out of the downtrend that you had, and the market has proven that now 2 days in a row, that 18-day average of closes, I like to call that the line in the sand. What I've discovered over the years is key moving averages on markets are areas where a market, if it's above it, might fall back and look for support, or under it might rally up to for resistance. And this average to me is a very important average. Doesn't mean you have to agree with me, but it's how I read it. So I call when the market's over that the bias is up. So I see an up bias market that stepped out of a downtrend, came down to support, found it there. Resistance, if it goes to the Bollinger Band, is back at 1447. What's important about the Bollinger Band? The Bollinger Band is an algorithm designed to keep the market trading within it 95% of the time. What I've discovered over the years is in looking at when you get to the 18-day average on a correction, it's like a pinball machine. You hit tilt, the trend that was going up reversed itself, corrected back to that number, and now that becomes in play again. It doesn't mean it has to be hit. It does mean the first time you hit it, it's a resistance point. I don't know how to explain it any more than that. In terms of momentum, you have corrected a market that, number one, was embedded. Embedded means the slow stochastic indicator, which is a momentum oscillator, changed from getting overbought and locked in a bull trend right up through here, and you can see what prices did when that occurred. Then when this reading was lost back here, you began a correction. Often, the slow stochastic indicator, momentum leads price. So if you're looking at this, you had the red line, which was both numbers were over 80, the next day they weren't. That's the sign to me that price and the 18-day average, or the closest of the 18 or 100, are likely, they don't have to, but likely to try to meet each other. So now I see momentum has left the bull market. The market then enters this phase of lower highs, lower lows. I've got a target there. Maybe it'll hit it, maybe it won't. I mean, that becomes the question. Now it hits it. At that point in my mind, the market has met its downside objective, and now the question is what next, and that's where we're at this point. But in listening to the Fed, if I had to guess, and I'm not saying August gold is the long-term play, because come August 1st, you can get deliveries and all kinds of other things. You're probably going to move out. Maybe a lot of traders are going to move to December gold. But in looking at it, if the Fed's bent on creating inflation, and if they're worried about the economy, well, the two things come together in gold. We don't have any inflation now. So gold is more of a worry about where the world is right now than it is worrying about inflation. When we take a look at GLD, GLD has kept the higher low, higher high combination. Could have lost it, it didn't. It lost the embedded reading here and never did hit that 18-day average. It certainly got close to it, and it served its purpose of telling you that the momentum might slip down, and it did. But it didn't hit the 18-day average. Now it's back into an uptrend, and until you take out yesterday's low, you've got the pattern of higher lows, higher highs. This could be a resistance point in the market. When we come to the gold miners, they're still very strong here. You have a market that is overbought, higher lows, higher highs. It too did not hit the 18-day average when it lost that momentum, but it got pretty close. The theory is they're going to make a run at each other. Ideally, you'd like to see them hit each other, but the word ideally leaves you some opening there. The point was you had lost the embedded reading here, and the momentum was lost. Now the question is, does this overbought condition go up again? Another important point. Generally speaking, what you want to see is the miners in gold go up as the gold is going up for a real bull market. Ideally, base metals would be there too. So you're always looking at the gold-silver ratio, and that has not shown a sign where it has changed its direction. It still favors the gold market. However, silver on its own today acted very well. The market has higher lows, higher highs. I want to take off today's action. We had talked yesterday when the market got up here to 15 and a half. It had negated the downtrend. You had an outside day up, and the first key resistance would be the combination of the 100-day and the 18, which were 1520 and 1520.90. Today the market broke through there. It settled right against it, but I can tell you the last trades of the day were closer to the 1526 level than they are here. Remember the close. The settlement is what we should call it properly, because close implies trading ended. The settlement price happens at 12:30 p.m., while the last trade happens at 4 p.m. Central Daylight Time. So they settle the market much earlier than they finish up the last trading. So now the question is, can the market keep going without breaking through this number? If it does, then my second question in my head is, does that change the gold-silver ratio? If the market's going to pop, a number it could go to might be that 1560 level. In the copper market, yesterday we had come down, as I had pointed out, to that lower Bollinger Band, and I'll stick with what I teach in my charting course. And if you haven't seen my charting course, you might want to go on our website, www.iraepstein.com. Not expensive, and it teaches you these concepts. But when you got down to that first challenge of the Bollinger Band, that's where I think the pros take some money off the table. Now, if the market rallies, we've got what we call that 18-day average line in the sand. That's exactly what you did today. You came back, challenged it, you went through the previous high right here, the lower highs. So now you've neutralized the downtrend and you're back to square one. I'm not sure what you have one way or the other. In the platinum market, you were able today to throw out and create the market. Now I'm going to say it's bullish again. Higher lows, higher highs. The market closed over the 18-day average. I would see support on challenges back to that. The uptrend would be broken if you took out 809.20. If the market has legs and can run, then maybe you've got these two numbers to deal with, 843.80 and 850.30. So looking at it, I think the bulls grabbed control. And a market that rescued itself today. If you look at this palladium market, I had mentioned, be careful, this market was losing its momentum. Well, the market, as you can see, kept the slow stochastics embedded, and today, if we look at yesterday's low, 1532.50, It opened higher last night, and it kept going the whole day. So it's turning back. That attempt to break down that momentum, still going up, and I believe you're at record highs. Now the question is the upper Bollinger Band resistance, 1595.50, but the pros grabbed control right back, and they never did let it go. It could have been let go, but strong move at the end of the day. Last in the dollar index, what is the cut of an interest rate, or possible cuts, plural, mean? And what did the Fed testimony mean for the dollar? Doesn't mean what I think. The dollar was down nearly 40 points today. It broke through a previous low. This uptrend is now broken. The market is overbought. I'm going to call the market trendless at this point. And the key two moving averages are right in this 96, let's call it 33 level, the 18 and the 100-day average. So if you break further and you drop enough, that could be an area the market wants to go to figure out what to do next. We write about all this throughout the day. And I know I wrote in detail today. If you haven't seen our research and what I specifically do, you might want to get it. If you go to our website at www.iraepstein.com, you can sign up for the Linn research, and then there's a free trial to my own research if you haven't tried it before. And I try my best to write a one-page research sheet summarizing what's going on, what the calls are early in the morning, things you should be looking for. In addition to that, I put out that morning video that I think is the most important thing I do. And the reason is I get my traders and my subscribers, if you will, ready for what I'm seeing in the market. And from there, you start making your moves, because I've had the opportunity before 6 a.m. in the morning. I've already seen what's going on in Asia. I've seen what's going on in Europe. I bring it right to you. I record a video about it, and I'm giving you my trade ideas, very different than you see in the videos you're watching with me right here now. I'm able to say, buy here, sell there, cover shorts, do this, do that. Very, very specific. You might want to give it a try. Go to our website. You'll see all the info there. I'm Ira Epstein. You have a good day.